Heavily shorted APLD lost 8.82% yesterday, the 17th of February 2026. And it was equally trending a couple of hours ago. It may still be trending, and it has become one of the most actively discussed names in the AI infrastructure space after reports surfaced that NVIDIA reduced its stake in the company, triggering a wave of speculation across the investor community. While some traders interpret the move as simple profit taking following the stock's sharp multi month run, others are questioning whether the sale reflects a more cautious outlook on valuation or near term execution risks. At the same time, many long term bulls argue that NVIDIA's partial exit does not materially change the company's underlying thesis. They point out that NVIDIA still maintains deep commercial relationships across the AI ecosystem, and that the company's growth story is increasingly being driven by hyperscaler demand, long-term leases, and expanding high-performance computing capacity rather than any single strategic shareholder. Adding to the intrigue is the company's plan to spin off its cloud services and HPC operations into a standalone entity called ChronoScale. The management of the company has framed the move as a way to unlock shareholder value by allowing the market to more clearly value the cloud slash HPC business separately from APLD's or other Applied Digital's core data center infrastructure platform. Investors see this as a potential catalyst that could highlight higher margin recurring revenue streams and attract a new class of institutional investors focused specifically on AI cloud exposure. Okay, so the stock is a high beta stock. You can see here 7.185. This is an indication that it amplifies the broader market by a factor of 7.1856. So if the broader market is down 2%, there's a chance that APLD may be down more than 14%. That's what it's implying. So the stock over the last couple of days, since the 9th of February, the stock has been showing a lot of weakness within a longer term bullish trend. It's 200-day moving average, which underscores the underlying trend, as you can clearly see, sloping bullishly upwards. Positions opened 200 days ago are definitely in profits, but not the ones opened 10 days ago. You can see here we have a negative $0.354, or rather a negative 0.354, meaning that positions opened 10 days ago are not in profit. The 10-day moving average is losing roughly 35 cents every day. That is what it's implying. It's just like a speedometer, if you're running, if you're driving down your street at a speed of 100 miles per hour, it doesn't mean that just at the point you were spotted, that's what you were doing. It doesn't mean that you're driving through the town. You don't probably you just that small stretch of road in your neighborhood. That's what it's just indicating at that very time. So right now, this is what it is indicating. Tomorrow, it may be totally different. It may go positive. Maybe $2. It may it may begin to indicate that it's gaining $2 every day, amongst other things. So the extrapolation is saying that this weakness may remain in place up to the end of today. Maybe from tomorrow, it might begin to pick up strength, but it's not expected to sustain it beyond Tuesday the 24th, indicating that the downtrend may resume. Yeah, so projections are currently saying, let's see what we have: 30.64, 37.57, 41.37, 43.72. Okay, there. Momentum is also pretty much flat, at least up till the 4th of April. So there is an indication that what we have here may well be what may happen. Further weakness may well play out. Okay, and in the interim, The 40-day moving average is expected to serve as a primary demand line, at least up to today. But after that, there isn't any indication that that will be the case. It may begin to serve as a primary supply line, especially from Wednesday, the 25th. Okay, let's have a look at its weekly chart to see what it's indicating in the for the near term, for the for the much longer term. Okay, here we can see the extrapolation is saying the same thing: weakness, 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 all the way towards the 3rd of August. But that's still a long time to come. But between now and the 9th of March, it's weakness, nothing to the upside at all. So there is an indication. There is the rising. There's the 40 week moving average is also rising to contain any contraction that may play out at least between now and the 27th of April. So the stock is expected to trade within this wedge, if you like. It's right now, for now, it looks wide, but it's expected to continue to taper if it continues to contract. So a contraction, a moderation is expected to play out. A moderation in the contraction is what is expected to play out. It's been playing out, but not to a great extent, but towards the 6th of April, that is what we should expect. But if it doesn't hold, if it doesn't stall this contraction, then we're looking at a free fall thereafter. So projections here are saying, let's see what we have: 55.9, 69.99, 78.69 on this weekly chart. The extrapolation here is also pretty much flat, so it may be an indication that this may well be what may happen. At least between now and the 13th of April, lower prices are expected to continue to play out on a weekly basis on the stock. So let's see how all of this will pan out. Let's see. I will definitely continue to update you. Thank you very much for watching this video.